All right, welcome back from that report. We are staying on the banking sector for today. The last time the CBN increased capital base for banks was in 2005, when the current Anambra State Governor, Charles Soludo, was the Apex Bank chief. The capital base was raised from 2 billion to 25 billion. To enable banks meet the new minimum capital requirement, the CBN on Thursday urged banks to consider to inject fresh equity capital through private placements, rights issues, and/or offers for subscription, mergers and acquisitions, and/or upgrade or downgrade of license authorization. The Apex Bank also said the new minimum capital shall comprise paid-up capital and share premium only. It stressed that the new capital requirement shall not be based on the shareholders' funds. My guest, Ambrose Omodion, is the Chief Research Officer at the Invest Data Consultant Limited. Ambrose is a well-respected investment and company analyst with over 20 years of experience. He is known for his work as an equities analyst, his training sessions for investors, and his weekly webinars. He is also a prominent expert on the Nigerian capital market, providing analysis and insights to investors, the government, and the market regulators. Ambrose Omodion joins me now to discuss the recent development and earnings of banks. Good morning to you, Ambrose.
Good morning. Thanks for having me.
It is our pleasure. First things first, Ambrose. What were your initial reactions to this pegging when the news broke yesterday?
Yeah, it's long, awaited. We'll be expecting it for more than getting to 6 months now, from September to date. But it's good that CBN came out yesterday to make it clear that this is their direction, and put every that they've done the right thing anywhere in the world. CBN has the interest of the economy, because they make sure that drive economy at any time, any day. With this step they are taking now, we want to solidify the banks and at the same time drive the economy toward to $1 trillion that we anticipate it to be. For me, it's a good one. But in doing all this, I think that no party or no stakeholder to be shortchanged. Because if we look at the announcement, we can find for anywhere in the world when we're looking at the banks capital base, we don't exclude their retained earnings, which was seen in this form. But to go back to 2005, 2006, during the capitalization of Soludo, all this we also were part of, and we saw improvement from almost 82 banks, bringing up to like 52 banks after the capitalization, which is good. We want that direction also. But now that we are saying that the retained earning is not there anywhere in the world, retained earning is part of what shareholders want, and part of any bank base, capital base. That means if your liability minus your asset, you get your net asset, which is also your shareholders fund. But if it is excluded, most of the banks will also struggle to kind of meet up the debate. But I believe that across the world, we have seen different companies, different nations. You don't exclude your retained earnings, but banks have different categories, which also we have done here. Tier 1, tier 2, tier 3, with different formula. It is now done on the regulator to go about what their capital requirement ratio or adequacy. These are the things, capital adequacy ratio. Of course, I know that the regulator should also come about. But for this one that coming that, yes, excluding retained earnings, we're already sorting the shareholders of this company that deny themselves for many years, not collecting all the profits from the bank, reinvesting into the bank. It's part of what they are worth. Now also we are coming back to the public to approach them for another round of what public offer right to. These are the people that want to invest again. That means next time we are making money. Also at the end of the day, they are retained earnings for the bank to expand. It's not considered. For me, I think this area that we should also be looking at. Yes, CBN, I would say they are wrong. They are regulators. They understand what they are doing. But ideally, go across the world, it is not done, or it is working for the first time. But I'm trying to see where you remove your retained earnings away from your capital base. I believe that is part of it. But we look forward to see more what CBN will in terms of because most of the banks in Nigeria, yes, you want them to be strong and be solid to impact the economy. But we need one thing, give them direction. That also they will encourage also to get that money they need from the public. Because if we are going this way, the best shareholders in that company that have invested and they retain earnings are not considered now. Most of the new that is coming, how they also have that confidence. But I believe that this way to look at what
Okay, let's try and gain more traction, right? Let's try and get to other grounds. Now, you will agree with me that the banking sector is comparatively doing well, told the speaker, the NGX, with an impressive closing figure as at the last day of closing yesterday. I don't know if my director can just blast some of the NGX figures that we have. You know, two banks really come to mind. Access Bank is at the top right now with the new management and all of that. But right now, I also see another bank too with a female, CEO there. That's Fidelity Bank, also standing out per se. You know, how do you see them playing out in the wake of all of this? Do you see a recapitalization in the offing, or what exactly do you think about the earnings and all of that?
No, for me, the banks have been resilient in terms of performance and also in terms of supporting the economy. The numbers we have seen so far, points to that our banks are solid and strong, which also is CPN have confirmed before now. But just for them to have more capital to do more business, that's what capital to drive the 1 trillion expectation of the economy. But for now, our banks are healthy and strong. But what we're trying to do now in terms of is to make them stronger and better. But if you look at the banks I just mentioned, Access and Fidelity, I say yes, they are moving, upward direction. You know that Fidelity for me is a second tier bank, but now with their performance, we are seeing them coming out. Either now that we are still remaining second tier, but they are the leader in that second tier. Why Access on its own is also already in first tier bank. But looking at the new capital, base we are looking at, I believe that they're already on the right direction. They've done private placement before now. Also, they are planning to do right issue. All this will also help them to achieve the capital requirement for them to do more. But I believe that also, like I mentioned earlier, that the central bank will know that these banks are coming back to the public to ask for funds, or either right issue or in their public offer. They are going to back to the public if the retained earnings of this bank that the shareholders have approved are not considered. I think for me, we send a kind of a signal to shareholders, and that also might affect the banks for raising funds. But unless keeping rethink between now and the 2 years time, because now we have almost 2 years window to recapitalize. In the process, I think and also come about another direction, fine. But I believe that it should give the bank a kind of good environment to raise the capital that needed to support their bank.
All right, you mentioned Access Bank being a tier one, being at the top of the pyramid in terms of the capitalization at the NGX. But let's talk about Fidelity. You talked about them being a tier two bank. I'm looking at the survival of banks and interest in terms of people subscribing to their public offers and trying to invest there. What can really sustain them in terms of what they have done or are doing over time to ensure that they meet up with their expansion plans? I hear they are trying to expand and all of that.
No, for Fidelity, I think they are on the right track before now. We have seen impressive performance for almost the past 10 years, and recently, the last 4 years, we have seen a dramatic improvement in their performance. Since the female the MD came on board, that really made a difference in terms of rewarding shareholders. Not only that, because the current shareholder will start performing. The shareholders show that the bank is doing well, so that the bank is also healthy. But they are also taking steps to show that they expand their world, their tentacle, by trying to now move outside the shore of Nigeria, acquiring Union Bank UK, also moves to go to some African countries, which is good. But I believe that it is all for them to put their bottom line. For you put your bottom line, you need to spend more than to capitalize. For me, they are already in the right track. The performance also speak for them, and also their business model. This is a bank that is what I call them the traders and export focused bank. Why? Because they are going to drive the sector of the economy that oil is voting. But if there's no trading, there's no trader, there's no exporter, our economy is still be shaking. But if they're on that angle, they're thinking of traders that are bringing in and importing within Nigeria. Also, exporters are also having an advantage of what they are funding. For me, it's a good one. And if they can expand in doing that, that will also support them. One thing is that every investor looking at where can I make money, and that is why for banks that are like Fidelity Bank, they are taking culture, that is where to start taking now, because one, they have already given us a signal or a pointer where they are going, and I believe that they will get there. But the management team, as part of the owners of this bank, they go to their, the book of this bank, so that most of them are part owner, and when we are part owner, we take it as their own business. That's why you see all the big companies we are seeing today in Nigeria. Look at the personality behind them. If this kind of personality has behind Fidelity, I see them going places.
All right, let's still talk about the general field right now, because I remember back in about 19 years ago when the first talk of capitalization was done, lots of banks were panicky, and Nigerians were saying that that's how would know who the main players or the active players and who is strong and who
Exactly.
is not strong. But right now we're going to see another round of maybe mergers and acquisition. You also talked about renewed capital market activity by banks, but you talked about acquisition of Union Bank UK. Can you tell me more about that? Is it like a big dream, or what do you really think?
No, actually, for you to be one of the international players or have the license of international bank in Nigeria, you need to also spread your tentacle across the nation. You have category of the national bank, regional bank. Since Fidelity is part of the international bank, yes, they need to also branch out of Nigeria, get more income to even at this time to help them also to push their world there. Anybody earn high currency, a good dollars, or spam or pounds, everything there for me is a good one. And also it shows that the bank has capacity of what of carrying bigger business. And that is why I love the move of central bank so for the bank to solidify by raising more capital so that they can do bigger business. Only that the manner and the way from that is what I'm saying. For the first time, I'm saying that yes, you are removing like I mentioned earlier, retain earnings from the bank. The banks also to know that once we remove earnings, because most of the banks already as we speak now, as some of them have almost 500 billion already in terms of shareholders fund, so how about above trillions. But if that is being taken away, I'm going to put the banks on the what on a tight, on the field again. But don't forget that I said it again, I'll repeat it now, that most of the shareholders are coming back to them. And they are the ones that also that approve the retail earnings because out of their earnings they pay a little or some ratio towards to investors and retain the other one to expand the business to invest. For me, if they're taking it away, that's why I said between now and the next 2 years that they're going to from this March to the next 26 March, I think things will unfold and will know better. But I believe that for Fidelity expanding outside Africa, outside Nigeria to other African countries or UK, it's a good move for them also to increase their bottom line and also strengthen the bank operation.
All right, Omodio, let's still look at other facts as it is right now, because I don't know, in your opinion, do you see some banks going under, those that cannot really meet up with this requirement? Because for at the NGX banking indices, Access Co is there, at the top of the pyramid. But when we talk of other good banks, GT Bank is there. For Fidelity, they can boast of strong financial performance, efficient management, commitment to sustainability, market presence, and you talked about them focusing on the market. And some people have even said it's like an Evo bank, as it were, with lots of people, business and traders banking there. But what would banks really need to do for those that may not be able to get these mergers or acquisition, like Fidelity is doing with the Union Bank and Access Co, broadening its management team?
No, for me, if you look at the pyramid, I'll say that the ETI is leading, followed by Zenith Bank, the four Access Co. For me, we have already seen that they are categories. If a bank either yes, you can't go on with that, you can also apply for lower license for you to stay in business. But I believe that this will open door for merger and acquisition for bigger ones. But if you see that yes, you are going to become a bigger business, you want to merge, you want to acquire, this is the time to do it. Like I mentioned earlier, that during Solidar's time, we were about 82 banks in Nigeria. Then after graduation, it was shrink to about 22. Today we have around that 18 or 22 or around that 22 within. Now for me, it's a good one. This time is another opportunity, but because we have seen another bank emerge, we have seen before there's no interest-free bank in Nigeria. We already see 3 interest-free banks in Nigeria already. We see those that are also regional banks, also some are also national banks. For me, this is the time for them to see where they can come together to become better and stronger. Also, don't forget that the regulation also going to change the structure of the ownership of the banks. At the same time, going to dilute the shareholding structure of the bank, and at the same time, the earnings of the bank. Because if you are going to raise more capital, that means you need to double your performance. Because if you are raising more capital, you are increasing your share in issue. Now that we're saying that we're recognizing share capital and premium for capital, that means you need more. And this will come with a public offer right issue. At the same time, we're expanding your share in issue, which is also going to dilute your earnings by the end of the day. The banks, this time, I'm not afraid because we look at the policy of the CBN, and another way is indirectly favoring the banks and other financial institutions. I believe that the bank is set for this, but the way they will go is what I know that most of the banks will think out. Whether we'll go for merger or we'll go for to take a lower license or also upgrade by getting more money from the public. The banks will decide where they are going. Yeah.
All right, just before we let you go now, Ambrose Omodio, let's talk about management structure, because they actually play a whole lot of role in terms of, investors, interest and of course the people who would actually want to participate in public offers and maybe rights issues and all of that. For some banks now they have taken the bull by the horns. People say women are better economic managers. Banks like Access Bank, like Zenith, and of course even Fidelity Bank, they have female CEOs at the helms of affairs. So how do you really see that come into play in all of this?
No, management for me is like we'll say that employers are engine of any company. So it is management. Without effective management and that are looking at the business, you get a lot of issues. But putting women at the head of affairs now, for me, we know that women are more the kind of meticulous set of managing affairs. I believe that in Nigeria banking arena now we're seeing a new face that the female are taking over, which is good. Also want to the ones that have been there before now. The recent one was from Zenith Bank. We have seen the performance of the lady in Fidelity has done well. We have seen the one at Cambridge IBTC. Looking at their numbers, we'll see more of that. That means also investors are looking to work with that are so they are comfortable with, because women they listen more, and I believe that also because that's why they have strategy. Not that because they are women, they understand the environment where they operate, and that's why they are making impact. For me, it's a development for the banks that we are seeing women heading the affairs for the banks, and I believe that will do more for the banking sector. That yes, they understand the business. Women are meant to look for business. Apart from men are the one leading, but that women they understand business perfectly. Now they are leading the banks. That would be a plus for all the banks.
All right, thank you so much, Ambrose Omodian, for your time and, of course, all the wonderful, insight that you have given concerning the new peg by the central bank for commercial banks, and, of course, what banks are doing in terms of capitalization and, building investors' interest. Thank you so much for your time. We do appreciate it.
Thanks for having me.
All right, that's the size of the show for today. I am Justin Akadonye. Many thanks for being there.